It's about that time of day again. My name is Joseph. It's Tuesday evening, April 18th, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bearish, sitting at the prior week low, trying to complete a measured move target, but we've got tomorrow's inventory report, so we're watching closely in the early part of tomorrow's session. The S&P is bearish with a triangle, a channel, and a trading range on the chart this evening, giving us plenty to work with on Wednesday. Gold is bullish with a spike in channel and a trading range tonight, which gives us two scenarios to consider for tomorrow. The euro is bullish with a spike in channel, but we haven't seen a pullback since early this morning, which tells us to look for a two-legged correction back to support levels tomorrow. The FDAX is bearish with a spike in channel, but we're sitting four legs down right on top of a big round number, so the plan is to look for better selling opportunities up at resistance levels overhead. Boy, we got some sloppy markets. We got some real strong breaks higher today. It's going to be a busy newsletter. I got a great video in store for you guys tonight. Plenty of reliable trading opportunities setting up for tomorrow. Before we jump in, though, I do want to remind you the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, it's only a small snippet on the YouTube channel. Not to worry. Go into that description of the YouTube video. In the description, grab that link and come follow that link. Come join me here on the blog at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our newsletter goes live. Follow me on social media, right below the video there, lower left-hand corner. Many different ways to follow me on social media channels. I'm always posting important charts, links, and updates. I just sent out the API levels for crude inventories tomorrow on all my social media channels, so make sure you follow along in the lower left-hand corner. Download those charts. Grab those charts for tomorrow. How easy is that? You can have all the charts from tonight's video on your computer for tomorrow by following that link below the video. And please don't forget to grab your free pass in the upper right-hand corner. Grab that free pass. You'll learn more with me in 90 minutes on that free pass than you will anywhere else in the interwebs. I can guarantee you that. If you're not an advanced member, right, make sure you don't forget to grab that free pass before you finish up watching the video tonight. And please don't forget, if you're brand new here to the SOT community, we got a great frequently asked questions page, and I'm always standing by to help you guys out 24/7. If you have any questions, hit me up on the live support tool on the right-hand side of the website. Boy, it's great to be back in the action here with you guys and gals tonight. I hope you had a great Tuesday session. Getting ready for a busy Wednesday session. Tomorrow's Wednesday, April the 19th. Tomorrow's a Wednesday, which means we're looking forward to some inventories tomorrow at 10:30, and that really is the big news of the day tomorrow. There's no major news coming out in the overnight session. There's really not a lot tomorrow overall, right? We got some ECB numbers early at 5 a.m., but I think most of the ECB stuff right now is watching that election later on this week in France. So tomorrow, we assume the big market-moving event tomorrow will be the petroleum status report at 10:30 a.m. Whenever we have that inventory report, we always remember, right, we're going to have some support and resistance levels from this evening's API report. I'll talk about those in a moment, right? We'll talk about those in just a moment, so stay tuned on crude oil, right, for this chapter on crude oil tonight, and we'll talk about the API levels for tomorrow. So anytime we have inventories, we know that there's going to be those inventory levels for the following day. I'll talk about that in a moment. And I always give you guys a 15-minute buffer, right? So 10:15 to about 10:45, I'll say 10:40. 15 minutes ahead of the news, at least 10 minutes after the news. You can go to a 5-minute. You can go to a 5-minute afterwards, but just be careful. Usually 5 minutes after that news comes out, we're still whipping around a little bit after that inventory report comes out. So I always recommend 15-minute cutoff ahead of the news tomorrow for crude traders, right? And of course 10:40, that 10-minute afterwards, that 10-minute buffer zone after the news comes out. Watch out for that tomorrow. That'll be your no trade zone for crude. Also, don't forget, S&P has been a sympathy mover when it comes to the inventory report as well. So don't be surprised if you see a bit of a reaction there on not only crude, right, but also the S&P 500 tomorrow. So major news tonight here major news tomorrow is pretty much the only thing in the report tomorrow is the inventory report at 10:30 a.m. That'll be the big market moving event. Obviously, that won't affect gold, it won't affect DAX, and it won't affect the euro here. It'll mostly affect the inventories on crude oil and a little bit on the S&P 500. If you are trading tomorrow afternoon, don't forget the beige book is not expected to be a huge market moving event, right? But we may see a blip on the radar of the S&P and gold, so keep an eye on that tomorrow. And of course, we'll talk about tomorrow night's news when we get there. Again, Inventories tomorrow, make sure you give them that 15-minute break, right? And then, of course, that 10-minute afterwards. Let's keep going here. Let's keep going. We got a lot to cover here tonight. Moving on now from the S&P now to gold. The yellow metal is bullish with a spike in channel and trading range this evening, which gives us two scenarios to consider for tomorrow. First, the range tells us to buy the lows with failures and look for the fake out breakout pullback at the high. We just talked about that on the S&P. Second, the spike in channel tells us to wait for a deep correction to prior support levels using a two-legged correction for a move back up to retest the high. No matter what happens, right, no matter which scenario we get, the target for the bulls is that prior day high, which lines up very perfectly, nicely with that double up off the bullish spike we saw shortly after 10 a.m. this morning. Boy, what a run here for the bulls. We saw this market kind of gathered itself at the end of the morning session this morning. It was a pretty rocky road here earlier on in the session. You can see here there was a bit of a fat finger this morning from one of the big gold dealers that sent this price lower. That was kind of a funny headline to read this morning. And then of course, right, that of course picks up steam into a bull spike and channel, right? Strong spike up. You'll notice we never pull back to the moving average, and without a pullback to the moving average, I really can't draw a measured move, but that strong spike higher, right, the best we can do with that is double up that spike and use it as a measuring spike. That measuring spike puts us right about that 97.2, which lines up very conveniently with that prior day high. So we have to assume that's going to be the ultimate objective here right now for the bulls. Heck, it may even keep pushing higher up to that big round number up at 1,300 tomorrow, right? I'm sure the gold bugs out there would love to see that number, right? Make sure you turn in all that extra gold jewelry, right, and get the best price for it. With that said, we got a bull spike and channel, right? Strong spike up, holds a pullback, makes a new higher high. Bingo. That means we have a spike and channel or a spike and wedge. There's tended to be a spike and channel. And of course, that spike and channel tells us, look left, let's find some of these areas of support, and let's get this price down so we can buy it low on the way back up to retest the high. Most important thing about a spike and channel is everybody knows we're buying once we see that candle right there, right? Once that candle shows up, in other words, a strong spike higher may just be a fake out breakout, but once it holds that pullback and goes higher, yeah, right there. Once that green candle closes to new highs, everybody knows we're buying. That tells us now that once we see strong move up, pullback holds, pullback holds, pullback holds, everybody should be long right now. There's no excuse that you should be anything but buyers right now, right? Sellers are buyers. Buyers are buyers, right? Everybody's a buyer right now. And what happens when everyone's a buyer? Yeah, there's nobody left to sell to us anymore. So what has to happen? We got to get price going lower. Price has to dip here, right, to attract more buyers, right? It has to dip here to attract more buyers who are willing to buy again. So we're keeping our eyes here on the prior support areas. Usually, not every time, but usually in these types of situations, when we get a deep correction like this, you know, again, when we're expecting to get a deep correction, we're going to talk about another scenario here with that range in a moment. But on a spike and channel, we usually get a pretty deep correction. And oftentimes, that will end up giving us a trend line here. So watch for a trend line coming down overhead, and then look for that. I call this a two-legged pullback or a multi-legged correction, right? Two-legged correction. It'll have more small legs, but the key is it's a two-legged, right? Kind of a two-legged, if you remove all the small stuff, a two-legged pullback or a two-legged correction. So usually during spike and channels, you'll see that deep correction. The range may have a different story for us. We'll talk about it in a moment. But that trend line coming down, watch that trend line, right? If it does kind of give you a deep correction, get back above it, right, and then back up. The bottom line is we definitely want to see price pulling back. The deeper the better when it comes to a spike and channel. And of course, the objective, and this is always important, right? If we do pull back, a pretty significant pullback here, the objective is to get back to retest the high. So that's where your money is taken right there. If you want to hold a runner, you're more than welcome to hold a portion of it, right, up to that prior day high, up to that double up spike. But just remember, though, the objective on a spike and channel when it pulls back into the battle zone is to retest the high. It's not to go any higher than that. So make sure you respect that and definitely take your profit, at least the majority of your profit off at that range high for tomorrow. With that said, second piece of the puzzle is this trading range. We just talked about this range, right? So strong move up into a range, bull bias. What's the plan? The plan is seller failure and back up, right? So we may only little slip right below the prior swing right there. We may only get a little tiny breakout to the downside and then right back up again. So we may not get that deep pullback that we typically get on a spiking channel. Remember, spiking channels are notorious for nice deep pullbacks because everybody's already long and prices to pull back to a nice tasty area, right, to attract more bulls. With that said, this trading range tells us we may only get a little trap low. Go down to a faster time frame, right, and find that entry for that trap low. Don't forget, we talk about traps, pullbacks, strength, failures, right, all the entry triggers we use in our trade room. We talk about that stuff in our advanced classes. On top of that, as we go higher, remember that two-legged, right, two-legged correction, little fake out, breakout, pullback there. The key is whenever we break out, right, whenever we break out of a trading range, we don't want to buy the breakout. We don't want to buy the straight pullback. And if we get a strong enough breakout to get the moving average above, right, above that trading range, then we know, right, then we know we have the strong enough breakout. But we don't want to buy high, we want to buy low. And whenever we want to buy low, we want to buy low with traps, right? So that trap low, right, just above that range high. Last but not least here, what would it take to be a bear market? It would take some strength, that's for sure, right? Strong move down, hold the pullback. Now remember, we're probably going to get a decent move lower here, right, with that spike in channel. So it may turn bearish here in the short term, but be careful, bears, selling too far down here. Again, it may turn short-term bearish, short-term, right, not long-term, but watch out for those buyers coming in around that battle zone for move back up, right? So make sure you keep your eyes open if you're a bear. Again, most reliable thing, though, would be get this price, strong move down, hold that pullback, right? And then, of course, if the bears call the pullback, right, they can take control of this market. We do oftentimes see short-term bear control in a spiking channel because we are expecting to see a significant pullback on the spiking channel. But again, that trading range may not give them much breathing room here, right, for those bears to work with tomorrow. So keep an eye on that. How about some euro here? Wrapping up on this nightly newsletter here, guys. Don't forget, send me an email, jj@schooloftrade.com. Let me know what you love. Let me know what you hate. How can I make this newsletter the very best thing to help you crush it tomorrow, right, in all of these 5 markets? Also, don't forget, if you're watching this video right now on our YouTube channel, right, don't forget to go into the description of the YouTube video, follow that link in the description, and come join me on the blog for the full-length version next time. Also, while you're here, right, join that free trial on the homepage here at schooloftrade.com. If you haven't learned more about how we trade here at SOT, go to schooloftrade.com. There's a link in the description of the YouTube video. Right, join the free trial, learn more about how I trade here at School of Trade, learn more about our 3 levels of membership, our beginner, intermediate, and advanced levels of membership, what I call the 3 or the professional trader transformation. And please don't forget, I'm always here to answer questions 24/7. Hit me up on that live support tool as well. Guys and gals, thank you so much for sticking around late me tonight. I know I'm a little bit late to the newsletter. I appreciate you guys spending your time this evening with me. Enjoy the rest of your evening. Be well out there. Be nice to each other. And be here tomorrow. Same time, same place. Adios, amigos. Bye-bye for now.